Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Now in this video I'm going to explain you about the microeconomics and macroeconomics. The meaning of microeconomics, its objective, scope and importance. Similarly, the meaning of macroeconomics, its scope, importance and objectives. These are the things I'm going to explain you in this video. Last video I have explained you about the meaning of business economics, its objectives, its scope, importance and role. These things I have explained you in the last video. Hope you have already watched the last video. If you have not watched the last video, I suggest you to go to the playlist of my channel, select the subject business economics, watch the first video. Be acquainted with the meaning of business economics, nature and scope, characteristics, importance and role. Then you can easily understand this video regarding micro and macroeconomics. So before explaining, take a screenshot of the notes which I have written on the board. Then I'll explain all the points in detail. So first of all, I'm explaining the meaning of the term microeconomics. Normally, literally, the meaning of the term micro is small, an individual unit. So when we study the individual unit, that study is called microeconomics. Specifically, we can say it is a study of individual units of the economy. In the whole economy, so many individual units are there, like companies or firms. So when we study a particular company or a particular firm, particular unit, the study of economics of a particular unit is called microeconomics. It deals with micro variables, small variables, such as price of a commodity, supply of a factor of production, demand for a particular commodity, etc. Like examples here. Examples are, we study the price of a particular product, the price, supply of a factor of production. So many factors of production are there, like capital or machinery or material. So we are studying the supply of these factors of production. Similarly, demand for a commodity. So when we study only demand for a particular commodity, supply of particular factor of production or the price of different commodities, it is called microeconomics. So microeconomics is the study of a particular firm, particular household or particular commodity. Only particular firm, particular household or particular commodity. Simply, it's a study of a unit. The unit may be a firm, the unit may be a household, or the unit may be a commodity. That is called microeconomics. The microeconomics is also called price theory because everything depends on price. The commodities are based, the demand of the commodity is based on price. The supply of material or any factor of production depends on price. So this microeconomics is also known as price theory because it analyzes the allocation of resources on the basis of related prices. The allocation of resources, the resources are limited, scarce. We don't have unlimited resources, limited, scarce resources. So how to allocate these scarce resources for production? That means this microeconomics will be helpful. Depends on price. Now, it is basis of price mechanism which depends on demand and supply. The demand and supply depends on prices. Depends on prices. That's why this microeconomics is also known as price theory. So this is the brief explanation about the meaning of the term microeconomics. Now, objective. Why we study this microeconomics? The reason is we have to make the policies, we have to make the principles or problems to be solved of a particular firm regarding allocation of resources. A particular firm will not have unlimited resources, it will have limited resources. So how to allocate these limited resources among different activities? For that purpose, we require microeconomics. That is the objective of microeconomics. Now come to scope. The scope microeconomics studies the following. The 3 points are covered under microeconomics. The 3 factors are theory of product pricing, and with its 2 elements, the theory of consumer behavior and the theory of production cost. Consumer behavior, because the whole economy depends on the needs of the consumer. We will produce the goods, only those goods which are required or consumed by the consumer. So this product pricing has 2 elements. One element is consumer behavior and the second element is the theory of production and cost. See here, once the firm has to decide what is the requirement or need of the consumer. Once we have decided what is the need of the consumer, then we have to plan the production. But production depends on the cost. So one hand we find out the consumer behavior and secondly we find out what is the cost of production. So this is called product pricing. Similarly, theory of factor pricing with its 4 elements. Factor pricing means the prices of the different factors of production. The different factors of production has to be paid, like human resources. When human resources are used, wages are paid. Wages are paid. Similarly, when wages are paid. Similarly, the rent will be paid for the premises used. For premises used, rent will be paid. Similarly, interest will be paid for the funds utilized. Lastly, profit is the return which the entrepreneur will get. So 4 elements are there which are called factor pricing. In product pricing, 2 factors, consumer behavior and next one production, theory of production cost. These 2 are the elements of product pricing. For factor pricing, we have 4 elements. Theory of wages, theory of rent, theory of interest, and lastly, theory of profit. Next one is third scope. Theory of economic welfare. That means the economy, how the individual firm is providing the service to the society. What is the economic welfare? See here, a firm should not be dangerous, should not be harmful to the society. The firm is existing for the benefit of the society, for the welfare of the society. So how the individual firm is giving the welfare to the society. So these 3 will come under the scope of microeconomics. Now, importance. Why microeconomics is important? It's very, very important because first one, microeconomics is an essential method which facilitates in understanding operations of an enterprise. Every enterprise, every concern will have some objectives to be attained. So that objective can be attained when we economically run the organization, when we economically perform the activities, then only we can be able to achieve the objective of the enterprise. Without studying the economics, we cannot be able to attain the objectives. Secondly, microeconomics is concerned with effective utilization of scarce resources. What are the resources of the business organization? Land, labor, capital, organization, all these are the factors of production. A business will become successful only when it effectively utilize all the resources. Example, human resource. The men are working. So if the men are efficient, knowledgeable, hardworking, skillful, then definitely the output will be more. The profits will be more. Similarly, if the workmen are lazy fellows, they don't have any specific skills, they are lazy, then definitely the productivity will come down. So a business organization has to effectively utilize the men, the machines, the material, the funds, etc. So by using this microeconomics, we can be able to effectively utilize all the resources. Next comes microeconomics provide a clear understanding of the people about the positive effect of tax. Normally, socio-economic information must be there to the people. The public must understand what is the impact of tax, why the government will impose the tax, how the tax are being utilized by the government. Next comes microeconomics can be utilized for analysis of social welfare also. Just now I told you, an organization cannot survive for long if it considers only economic value. Apart from economic value, the firm should provide welfare to the society. Next comes microeconomics helps an entrepreneur in attaining higher productivity level with the available resources. Then the application of microeconomics tool helps to help the firm in measuring the consumer demand and computing the cost of their product. By using this microeconomics, the firm can be effectively utilize all the resources which are there in the firm, like land, labor, capital, etc. This is the complete explanation regarding microeconomics. So far I have explained about the meaning of microeconomics, the objective of microeconomics, scope, and lastly importance. This is very, very important for individual unit point of view. Next comes macroeconomics. Macro means large. Simply I can give the definition example like study of trees. Study of individual tree is a microeconomics. Study of all the trees in a forest or study of a forest is macroeconomics. So individual study and aggregate study. Individual study is microeconomics. Aggregate study of the economy is called macroeconomics. So macroeconomics is a study of aggregates. Aggregates means total. It is also known as aggregative economics. That's why, because it's a study of aggregate, the macroeconomics is also called aggregative economics. Macroeconomics deals not with individual quantities as such, but with aggregate of quantities. That means we are not studying the output of a firm. We are studying the output of the complete nation. The output of the nation, national output, that is macro. Individual output is a micro. And not with the individual income, but the national income. When we study only individual income of a unit, it is called microeconomics. When we study the national income of the whole country, it is called macroeconomics. Similarly, but with the individual price, but with the price level. When we study the individual prices of a particular firm, it is called microeconomics. When we study the general price level of the whole economy, that is called macroeconomics. And not with individual output, but with the national output. Just now I told you, when we study only individual output of a unit, it is called micro. When we study the national output of the whole country, it is called macroeconomics. This is the definition of macro. Now, objective of macroeconomics. Just like we have objective of microeconomics, we have objective. Why we study aggregates? So, the objective of macroeconomics is to study the policies, principles and problems related to full employment and development of economic resources. See, the main objective of every economy, every country is to develop economically. So in order to understand, in order to achieve the higher economic growth rate, we need the study of aggregates. Without studying the total national income, total output of the country, total employment, total population, total consumption, total production, the government cannot be able to make the policies to achieve the economic development. So objective of this macroeconomics is to study the policies, principles and problems of the whole economy, which includes the aggregate of all. Next comes scope of macroeconomics. The scope wants to study the detail. Macroeconomics is the study of aggregate or average of complete economy. Average of the complete economy, like total employment. How much is the total employment of the country? Total national income, total national product output, total investment. How much is the total investment made? Then total consumption. How much is the consumption? Total savings, aggregate demand, aggregate supply, and general price level. That is the scope. The macroeconomics deals with the aggregate, total employment, total income, total production, then total investment, aggregate demand, aggregate supply. All these things will come within the ambit of macroeconomics. The study of macroeconomics is necessary for understanding the working of the whole economy. Without understanding macroeconomics, we cannot be able to understand the functioning of the whole economy, how the economy is running, how the government is making the policies. The government will make a number of policies and programs based on the study of macroeconomics. By studying what is the employment situation, what is the product, what is the aggregate demand, what is the aggregate supply, what is the national income, what is the national product. By having this information, the government can be able to make the policies and programs. Now, the study of macroeconomics is necessary. Now, macroeconomics is also called the theory of income and employment. Remember, the microeconomics is also called the price theory, whereas the macroeconomics is also called the theory of income and employment. Now, it is a study which determines the reason for unemployment and helps in taking different corrective actions. The main, for achieving economic growth, we must have full employment. There should not be unemployment. The government has to find out if there is unemployment, why this unemployment is happening. So the government has to make the plan to remove the unemployment. Then, hence, macroeconomics concentrates on determining the problems of country's total income and causes of its fluctuation. The main objective, why this macroeconomics is done, why it is studied. The government can be able to make the policies and programs to remove the unemployment, to increase the national income. That is the objective. Now I am coming to the next point, that is importance of my macroeconomics. Why it is important? After listening this lecture, definitely you will be in a position to say that macroeconomics is very, very important. Both are important. Micro as well as macro. Micro is essential from individual firm point of view. An individual firm will take into account the microeconomics, whereas the government will consider the national economics. That means macroeconomics, aggregative economics. First one, macroeconomics is an essential tool for formulation and implementation of economic policies. Just now I told you, the government has to make a number of policies and programs. Without conducting macroeconomic study, the government cannot be able to make the programs and policies. Then, to have clear understanding of detailed and complex economic system, the study of national aggregates such as income, output, expenditure, saving, investment is very, very essential. Economy is, the complete whole economy is not simple. The economy is very, very complicated. So if you want to study the whole economy, then you must have the knowledge about macroeconomics. So a person must know how much is the total production, what is the total national income, what is the total national output, how much is the total production, total consumption, total demand, total supply, general price level. If this information is there, definitely then only the person can be able to understand the complex economic system. Next one is the growth of the society and its welfare cannot be measured in microeconomics. Only macroeconomics is capable to do it. Growth and economic welfare. The government is not only concerned about economic welfare, but also social welfare. How much is the social welfare? So by conducting the study of these macro aggregates, the government can be able to implement the social welfare schemes. Next ones, macroeconomics provide information concerning aggregate demand, national income, consumption and saving of various countries. That means what are the problems in India? We can compare our performance, our achievements with other countries. By comparing one country with another country, we can be able to know which is a developing country, which is a developed country, and for developing country, what are the steps to be taken to accelerate the economic growth, economic development. Next one is the development of macroeconomics resulted in the study of economic growth, which in turn assists in analyzing and understanding the problems of underdeveloped economies. So many countries are underdeveloped. Underdeveloped means the resources are not fully utilized or effectively utilized. By conducting these macroeconomics, a country can be able to know what are the reasons why our country is underdeveloped, how we can be able to achieve the economic growth, economic development. So these are the benefits that this shows the importance of regarding macroeconomics. So in this video I have explained you about the meaning of the term microscope, objectives and importance of microeconomics, study of individual units. And secondly, the meaning of macroeconomics, its scope, importance and objectives. So hope you understood, you are clear in mind regarding the meaning of the term micro and macro. Inshallah, in the next video, I'll explain the differences between micro and macroeconomics.